Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar. Yesterday, the Reserve Bank of Australia kept its interest rates unchanged and preserved the record low cash rate at 1.5%. The statement that was released after the decision offered no hint of its bias. In the statement, though, the RBA Governor Philip Lowe appeared more comfortable with the state of the inflation, with any signal to any further rate cuts may be off the agenda for the foreseeable future. So this in terms has actually helped the Australian dollar a little bit to the upside, and now as it focuses towards the resistance of 75.5 minor and the supply zone, which I've highlighted here at 75.9505. It is viewed from this region the market should eventually foul and look back towards the support at 74.95, with the objective still holding beneath there at 74.2535. Well, as you can see, the euro is still contained by that resistance of 109.50.55. In the outlook ahead of today, in the Eurozone, it's about to publish its preliminary estimate of its first quarter growth. And also tomorrow we have the FOMC rate decision, which comes out 4 AM in Sydney time, which we need to keep a close watch on because it may impact on the US dollar. And if it does strengthen it, which I'm expecting due to the fact there is bullish divergence, is that we could see the market move away from 109.50 and back towards the downside to eventually fill this gap in and look towards the challenge of 107.60. On the day, the intraday range holds at 108.85 to 109.50. Well, the dollar yen, since establishing a support base from the low 111 region, the market is now looking towards the 112.80 to 113.10 since clearing the resistance of 111.95.05 overnight. However, we may see some consolidation into today as Japan takes a holiday. However, with the risk events in the next 24 hours, mainly out of the US, could see further potential to the upside. And if we clear 113.10, that could bring a target up towards 115. So reassess from there. Any pullback should find 111.65 as a temporary base. Well, the Great British Pound managed to trim most of its losses overnight after the British manufacturing PMI improved to 57.3 and well above the forecast of 54. The improvement was its highest level since 2014, giving signs that the British economy has weathered the Brexit storm better than expected. So at the moment, the market's trading around 129.40 and the resistance coming in now at 45 could actually be cleared, but towards 129.85.95 to 130.60, I expect to see good supply coming in. As you can see here, back in September last year, the market did fall very heavily from this region, so I do anticipate that again. Support on the day is seen at 128.50.60 after the overnight pullback was shortly brief. Gold has remained in a bearish outlook for the last few days, and it continued with the overnight low now printing at 12.52. With 54 support out the way, I expect to see further weakness and could see the market fall towards 12.42 and reassess from there. Any advances on the day sees the resistance from 12.58 to 65. And wrapping up with silver, well, the market stabbed at that 1660 level, so the objective has now been achieved in the short term, and I do expect to see a rise now up towards 1695 to maybe even higher to 1715. The reason behind that is the stochastic has bottomed out and is slightly in the oversold region, and also the MACD may have bottomed out as well. So for those that are short, might be time to take profit and reassess. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day ahead.